The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, David White.
And welcome all to another, what would you call it? Great show. But kind of putting our mouth back in the lion's, our head in the lion's mouth again. As we left yesterday, I was looking for 4,300 on the S&P cash and said that would kind of be the top range that we were looking for. So we've had a massive reversal yesterday and a massive reversal today. But does it actually mean anything other than we're having some wide swings and a big disagreement about the value of stocks or at least equities? Certainly everything else is not being any kinder to us. There is no kinder and genteel movement in most anything else. Gold was up very significantly, pretty much sold off, still up $7 or so. Crude, of course, we had the rip of the century yesterday. A lot of that was based on a Senate panel wanting to stick their finger in the eyes of the Saudis. Unsure why they want to raise prices to $150 a barrel, but the Senate panel did pass. And we'll see whether or not it makes it through the Senate and gets signed. But I would call it, instead of what they're talking about, I would call it the guaranteed $150 a barrel bill. I have to think that the Saudis think that the U.S. Current administration is bat crap crazy. One day they ask for more crude, and the next day they insult them. This bill is really kind of trying to get rid of any Mideast oil here in the United States, with diesel in the 650s and looking like it's going to go to the 750s level. Not good at all. But that all kind of happened yesterday afternoon. There's some other political stuff going on that people think could lead to mass chaos in the streets this summer. So is it just what we're seeing now? Is it just or is it just the bonds? Very tough to dissect what the market's reacting to. The TLT, of course, blew up today. And when we get into that, it's just a bloodbath. Even the extension should have been to something like 118, which we had. But man, talk about getting your third gap down. Probably the only good thing in all of this is that you do have three big gaps down in the TLT, so you may be finding some kind of low in the bonds over the next couple of days. The first gap came at 135. The second big gap came down on around 120. And this is the third really big gap down in continuation of that day. So could we have a three-gap play to the bottom? We certainly could. This is a very extended ABC on the way down. The question is, I think, more political than anything, and that is, are we going to change our policies on energy, which I think are kind of infecting literally everything in the economy. It is the crude at market prices is the method of all capitalist societies. Now that we've decided to go not based on free flow, but what we think it should be because this is what we believe. I don't know if anything else really changes. I think if you're going to stay long stuff, you can stay long many things in the energy sector, but even then probably muted upside, because there is the thing in Wall Street where you do the wrong thing, which is you sell the thing you can because you can't sell the thing you can't. But even the XLE, as we look up here today, kind of a little bit of dark cloud cover, not quite yet today. Certainly don't have the volume that you needed. We wanted something approaching 1 million shares to blow through the top. So maybe this bill doesn't go through. Maybe it's something else. Maybe there's a giant retraction in the policy of U.S. oil back to market prices. Maybe there's a lot of things that I think that seem apparent today that won't seem so apparent tomorrow. But I don't know. I think probably right now about 80% of almost everything has to do with the cost, or at least the issues we have to do with the cost of energy. And probably about the other 20% with the rising interest rates that we have. You can give me a call today at 877-927-6648. You can also talk to Tim Ord, who's supposed to be on here in just a few minutes. He said he wanted to come back on depending on how things went, and he sent me some charts. If you want those to follow along as a home gamer, either now or later, you can email me and I'll fire them back to you during the break or the next break. But he should be on in just a minute. I don't know if he's called in quite yet. And we'll see. Right now, as far as I can tell, we've got more volume, but we had more volume yesterday. Is it going to blow through the 13 billion shares we had yesterday to the upside? Well, we've got 8 billion now, but I can't tell you. It's not a burning bush. This may just be one of the most violent consolidations we've ever had. It also could be a pretext. I've never made any real bones about that I believe we're in a bear market. It's just generally in a bear market, you do stay up a little bit longer than one day. I thought we were going to come back something like 25 or 50 points. So I missed the downside. But at least I did the right thing and sent out an update yesterday that said if we hit 4,300 on the S&P cash, sell everything you got. I kept one thing, which is a big lottery ticket on us bouncing, and now it would be us bouncing tomorrow. And I was actually thinking today that not much was going to happen, maybe some pullback, and I would go for some calls tomorrow. So we'll see. Anyway, if you want to talk to me or Tim, someone just emailed me, Tom. It's Tim Ord. We'll be back in just a minute. 877-927-6648 and path at TFNN.com.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information.
Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
As we return, we have Tim Ward on the line. And before we get into talking to him about the markets, had some conversation with a couple of subscribers of mine. I think they're kind of confused about what Tim Ord does or has done in the past, so I want to kind of get a better idea. Tim, of course, has had his own newsletter for a long time. Newsletters for retail traders is probably more or newer than newsletters for fund managers and those kind of folks. Tim won numerous awards for Timer of the Year and various things, but I want him to get his opinion on it. There was a gentleman who I talked to a few times to try to get him to check out my newsletter. He was rather gruff, unpolished, not easy to get along with. But one of the things he would do is, if you were a newsletter writer, is he would not let you change your opinion of a market anytime quick or soon, because most of the people that subscribe to his newsletter, the Timers Digest, these guys couldn't get in and out of positions. They were handling other people's monies, and they could lose their license or go to jail for over trading an account and running up commissions and other stuff like that. So most of the time they were asked to do things like what's going to happen in 30, 60, or 90 days. And he'd kick you off if you changed more than a few times in a month. That wasn't his crowd. So to actually be pretty good at a newsletter writer, and Timer of the Year, you had to not only be right, but be able to sit through a lot of times when you were wrong temporarily before it got right. Anyway, I want to welcome to the microphones Tim Ord. And you have any comments on what I said?
No, you're pretty much right. Yeah, they were. He didn't like weak traders, I guess you might say. So you had to perform. You had to adjust, I guess, to his way of what he thought was since he made the judgments of where you got put in the cycle of winners and losers, so he had pretty much adjust to his way of thinking. So,
I have a feeling.
I guess.
I was going to say he kind of knew who his clients were, though, and that was these guys that you go in, you sit behind a desk, and they put a whole bunch of stuff in some portfolio and give you a lot of nice pie charts and stuff. But the reality is those folks could get easily sued if they overtraded. And they had 20, they may have 100 different customers, and they can't be trading everybody's their portfolios in and out on a daily basis. So generally these guys would set up something and come back in 3 months and go, okay, we revisited your portfolio and we're going to adjust this and do that, right? So
right,
I think, yeah, so he was kind of really being a timer of the year is not only being good, but being able to be good over time, even when the market's kind of against you a little bit. Right? You have to sit through the bad days to get the good days too.
Right. Yeah. So a lot of times, your younger traders seem like they start off, almost on a minute chart, and if time starts to go forward, they start working up in the higher time frames. And the old folks seem to start looking at the dailies, weeklies, and monthly charts. And so, the gunslingers, I guess you might say, the younger crowd eventually starts going over into the higher time frames too. So, let's get to the charts if you don't mind.
Yeah, we got plenty of time here today.
All right, because we're going to look at actually it's not a huge picture, but I screw around with the trend index or ARMS index, kind of from the way back in even in the late 70s when I started really get interested in technical analysis. And I come up with a few different ideas about it, but the chart number one on the top window there, a lot of times the most simplest charts are the best charts. Sometimes you get too busy, I guess, in your indicators. You kind of lose sight of the forest and you start looking at too many trees. And this indicator kind of, I'm a big fan of panic, so I do a lot of stuff with ticks and trend and actually the VIX, and they're kind of panic indicators. And if you ever look at some of these big declines, that's not always, but most of them, the ones are like the 2008, 2000 type declines. A lot of times the panic doesn't happen until you get near the bottom. And so I kind of developed this over time, and over the last several years, when the market kind of just went down right off of some sort of a minor high, panic came right in the market really quick, telling you that this decline is probably not going to continue. And that's the reason why this market's kind of rallied here over the last several years, because we got panic right off the highs. Now, that kind of excludes off the March 2020 high, because that was kind of an anomaly. That was the virus announcement type thing. And I think caught the market off guard on that particular decline. But in general, if the market starts off really showing panic, chances are the market's not going to go down very much. And what I want to show today is, getting back to that top indicator, which is the 10-day trend. And trend actually is a kind of a volume advanced decline indicator. It measures volume and measures advance, and also measures decline, and also actually measures down volume. So it's a good indicator, kind of tells you what all the market's doing. And in general, when the market's above 1.5 or higher, that's showing panic in the market. When it gets down around 0.5, that's kind of euphoric. The bottom works, the panic works a lot better than euphoria at tops. The market can be euphoria for a long time, but panic's usually a very short period of time. So when the 10-day trend gets above 1.2, that's on the average. In other words, you have a lot of days in there that may be higher than 1.2 on average, though. But if you get around 1.2 or higher, and those red lines show the times when that has happened. Well, we'd hit 1.21 last Friday, and so far that's still a low right now. We're almost trying to attack it right now. So if you look at the arms today, as we're going down here, we're at 2.06. And as we're as we're talking right now, we got 970 downtick readings. So the market right now is actually panicking. For this method to work, or for this method, you would have actually got a buy signal on Friday because the 10-day arm did close above 1.20. And since you got a panic right now in the market with, about 800 downtick readings right now with a 2.02, you'd actually be holding that position because you got panic. I hear the.
Yeah.
So we'll take a break.
We'll be back in a minute. I sent you an email, and we also have a question about the trend being over 2 today when we return.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
As we return, we're at Tim Orr, look-merkle.com. And we have a question. The first one, actually, before you even started on that chart, came in about, do you think we better rally right now, or do we crash into next week if we don't with the trend over 2?
Well, actually, let's go through the charts, because actually that kind of covers that question over the next couple of charts.
Okay.
So anyhow, we got the 10-day average of the trend over 1.2. That was last Friday, which so far is a closing low. Can we attack it today? Yeah, maybe. But as long as today's trend stays up, I think above preferably 1.3. We're at 2.012, so I'm thinking it kind of confirms it. So let's flip to chart 2.
Okay.
All right, chart 2, I think that's an hour chart. Yeah, it's a 2-hour chart, actually. And the pattern I think is forming here is the head and shoulders bottom. And if you notice on the hourly chart, we had a sign of strength. See that big spike of volume? That SOS is for a sign of strength. If you notice, it broke above those 2 previous highs up around 4,300 on the SPX. So normally when you break a previous high and higher volume, that changes its trend from from down to up. Usually, if you break a previous high on lighter volume, that'd be a bearish sign. If you break a previous high on higher volume, that's a bullish sign, and that's what's happened here. So you busted above, so I kind of drew this morning, and I didn't know how low it would go, but, we're probably, in my opinion, we got about, an hour and a half to go in the market. And so we're kind of probably making the right shoulder low right now. What's curious about this, if you measure the bottom of the head to the top of the potential neckline, which is basically the head's around 4,000, and the neckline's around 4,300, which is basically 300 points. And if you measure 300 points at the neckline, you come up with basically the previous high of March, up around that 46 and a half range. Now, I'm thinking that's where we're going to go. A lot of times these head and shoulders patterns are symmetric both in time and price. And so whatever that left shoulder took, took a couple of days. So this probably could go into Friday, Monday, forming the right shoulders, how I'm viewing it right now. And as long as panic is present, in other words, that trend remains high, I think the right shoulder will form here. And with a 10-day trend, in bullish territory, which is more of an intermediate term type, the longer term, because of this 10-day period, it takes in a longer time frame. It implies that it doesn't predict. It predicts a longer time frame. In other words, it doesn't predict like market will be up just tomorrow. It predicts it might be up for the next week, maybe 2 or 3 weeks. So, in my opinion, everything's kind of falling into place as far as that goes. And if you go one more step here, go to chart 3. If you got time to put that up.
Okay, we got it up.
All right. We had, on February 24th, we had a selling climax. If you kind of look at the chart there, that's back in February. You had a selling climax, a lot of the selling. And actually, you mentioned that selling climax was going to get hit. I thought it wouldn't because over the last several years, a lot of times these selling climaxes, several of them didn't get tested. A lot of them did, and some didn't. So I thought this time around, it may not get it. Well, it did happen on, this is a daily, so it happened on Monday of this week. It tested the selling climax of March 24th, and you can tell the volume was, you had about 200 million on February 24th. You had about 150 million on, May 2nd, wherever that Monday was. And so it couldn't get below it. So it can't get below it. If you can't hold the previous low, it'll reverse and take out the previous high. And previous high is back up to that 4,600 again. This is the SPYs. So, and I got that 311 and 166. That's the downtick reading that day was 311, and the trend reading in that day was 1.66. And we went down again, broke a new low, and the trend was 2.2. The ticks was minus 73, and the trend was 2.26. The next day was low. So you had quite a bit of panic in that vicinity going into that low. So, today as we're talking, we got panic right now. So this whole thing is probably, in my opinion, the head and shoulders. You had a successful test of the selling climax low. Can't get through it. You're probably building a head and shoulders bottom here, and the right shoulder right now is forming. And that may take, if you keep the whole pattern symmetric, this could, run into next week or so. So that's how I'm viewing the market. And whatever happens, if we do get to 460, that'd be the third time up. Either we get through that area or we don't. And I'm not sure what's going to happen, but I do think we will get to 460 or 4,600 on the SPX, 460 on the SPY, and that'll be really important because you need to get through that high with a sign of strength to keep the market pushing higher. So I don't know what's going to happen at 460. I'm thinking this whole thing's going to just flip sideways, and that 460 could be some sort of a high. A lot of times, May, seasonality-wise, the old adage, sell in May, go away, may play out this year. So we'll have to wait and see. But I'm not I don't know what's going to happen. Right now, I'm bullish, and I'm thinking that 460 area is a target, and what happens from there depends how it goes up there and what the volume is and all that type of stuff. So we'll have to wait and see. So okay, I'm hoping we answer that guy's question.
Well, we've got a follow-up. RSI is in danger of putting in a lower high and a bear high zone below 65 on the chart 2, SPX upper panel. So
I worked with a lot of RSI stuff. And I keep an eye on it, but I kind of abandoned it because it's so, it's, I don't know, it works fairly well, but, when you get panic in the market, it seems like the signal's a lot better, I'll put it that way. RSI, sometimes you get a lot of failures, so not saying RSI is not working this time. Personally, with the failure going on, with the market pulling back and you got panic here, I'm thinking the panic readings are going to trump the RSI readings, I'll put it that way.
At least in the short term or in the long term?
Short term, was he talking about RSI on a daily?
I do not know. So
okay, then, if you didn't have any fear here, that would be the time to worry.
Okay.
And it's good. Your audience is kind of fearing in there because you got to have panic at a bottom. Yep. If you don't have a panic. If you don't have bottom. So when everybody's screaming and yelling and going for the exit, that's probably the best time to buy. And like I said, these indicators that show panic are the indicators to watch. So
well, as they say, we'll have you back here in just a minute. As they say, sell on the trumpets and buy on the cannons. So we'll be back in a minute.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
And we're back to the last segment. Tim Ward. During the breaks, I sent you a couple of emails. Hopefully you picked those up.
Right. Louisiana Pacific. I'm just looking at it right now. He was talking about the daily, but I kind of look at the weekly and monthly also. And the rally in 2020 hit a high, then it did over a 61.8% retracement from the low back in, looks like about June or July of 2021, rallied to a high in December of 2021, and fell back down to a low here in April of 2022, and it retraced way over 61.8% retracement. What I'm thinking this pattern could be is 3 drives to a top. Normally you want the retracement off of like the December high to be at 50 or less percent retracement. This one went way back below that 50% retracement. So I think there's a good chance Louisiana Pacific will hit a new high, but that'll be the third drive up on a monthly chart. That's how I'm viewing it. Looks like an ABC down also from I guess it would be the December high down to the April low on a weekly chart. And on a daily chart, you probably got an ABC going up here, and you're in the C now. And we may hit a new high, especially if I'm right about the market. This is the bottom area in this vicinity because we got panic. And so if the market does bottom in this vicinity and we do see a rally in May, the Louisiana Pacific may hit a new high. But that'd be, since the retracement is so deep on the monthly chart, I think that could be the third top. So I hope that answers that guy's question. But he was looking on a daily chart. So,
what do you think? We've got kind of light volume into yesterday on that push higher. On just the dailies, the spike that you're talking about, which is the May 10th, 2021 high, had about 3.3 million shares. Yesterday we went into it with a little under 1.9 million shares, so not quite half, but pretty close to half the volume up there at the highs. So if you were talking about 3 drives to a top, do you include the volume on that? Because that does look a little low.
Yeah, normally, the last rally up should be, relatively light volume to really prove the point, I guess you might say, using Weiskopf's language, once, the breakouts, I'd probably look on a weekly chart, just check the volume, because that high back in December there, it showed more up on a weekly chart. It's kind of hard to read on a daily chart, but, it's a little bit better than 78, looks like 78.5, whatever that high is back in December. You want to assign a strength through that high to really prove the point. Well, if over the last couple of days, this thing just zoomed up. It's using a lot of energy before it even gets to that. Well, it's awful close to that previous high of December. but you're losing a lot of energy right now to try to get through that high. So it's, will this rally continue? I think it will in general, but it's, you got the RSI already up to, hit 70 yesterday or something. So it's kind of extended on a short-term basis, but I still think it'll still push higher. But I bet it pushes through that December high on the weekly. If you look at the weekly charts and check the volume, I bet that December high will be if it does break, which I think it will be on lighter volume. That'd be a little bit more confirmation that you probably do have a 3 drives to the top pattern, and it'll be a signal that may be a kind of a bearish sign sometime in mid-December if you're up around 80 or something. So
okay.
That's how I'm viewing it. So
how about the Qs?
Qs, I'm thinking right now if the Qs are weaker than the S&Ps. You're really in bull markets. You want the Qs to be higher than the SPY or outperform the SPYs, and that's not happening here. If you look at, if you do a ratio between the Qs and the SPYs is outperforming the Qs. I do think the Qs will go up, just like the S&Ps will, because they're kind of mirror each other. But I don't have a Q chart right in front of me. Whatever the previous highs of the Qs, well, put it this way: if we do get to 460 on the SPYs, whatever the Qs is, that's probably going to be where its potential high could be also. So right now the S&Ps are leading the Qs, so the Qs are a lot, so that's kind of a bearish sign, I guess. Over the last several years, Qs led the SPYs. Now you got the SPYs leading the Qs. So I'm thinking 460 on the SPYs is going to be an important target, and whatever the Q price is at that time, it'll be an important target for the Qs.
Well, if we have time here, UNG, natural gas ETF. I don't know if you have that in front of you.
I can put it in front of me. Actually, I kind of like the energy sector. The energy sector, in my opinion, looks pretty good. This thing's, I kind of keep an eye on it, but I don't really, do a lot of technical analysis on it because I got some oil stocks that I kind of like, and natural gas is an energy stock in the same sector. But this could be a 5 run up here on a short-term basis, but longer term, I think is fine. If you do an Elliott wave type thing, I'm not really a great expert in Elliott wave. If it's obvious, then I can probably identify. If it gets too complicated, I'm not good at it. But this could be probably a 5 wave up here, and probably see a high, but not a major high. We're hitting new highs right now. Actually, let me go back and actually say several years and look at that.
Are you there?
Yeah, I'm here. Hang on one second. I'm trying to get a monthly chart. Go back to about 10 years. Yeah, the monthly charts, momentum rules all indicators is how I do it. And if you do a monthly Bollinger Band on it, it bottomed back in early 2021, and we're way above the mid-Bollinger Band. A lot of times you can pull back to that mid-Bollinger Band if you get too far from it. But I'm thinking, since the monthly charts momentum is up, this looks pretty good longer term. I know, and you had a lot of volume coming off that bottom, and they actually had a sign of strength in April with a big spike in volume. So I'm thinking longer term, this is my opinion, a good sector to be in. I think the war on oil, I guess you might say, from this administration it's already had its bear market. I put it that way, and I think it's turned into a bull market now.
Okay. Want to thank Tim for being on again this week. We'll see him in a couple of weeks. Tim Ord of the ord-oracle.com. Thanks for being on, Tim.
Thank you. Bye.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And, you know, the folks in the den are getting giddy, but they have to go to the montage videos in Discord. 877-927-6648 if you're incredibly fast dialing. But we're dwindling down to the last 2 minutes. In fact, I can give you a 2-minute warning in just 30 seconds. But what do we have going on? Well, it could go either way. And, you know, you don't have to bet on every move in the market. I generally wait for the big fat bitches like Monday, being able to buy Monday and sell on Wednesday and get out of the worst days of the market. If I would have known it was going to be this bad, I would have gone short. But yeah, the NOPEC bill becomes law, that UNG chart will double. That's probably true. I forgot that was the name of the bill. But yeah, you can see a lot of stuff going on here. A lot of moving pieces, but you know, generally you're better off until you wait. I don't see any reason why you want to stick your head out just yet. But we'll kind of, as many people in the den did point out, 2:30 is generally when you see the round of margins calls. That really didn't blow the market apart, which kind of tells you that, one, we've already been kind of down here, so there's not that much different a couple weeks ago. So unless they did something stupid like margin up in the meantime, which I guess we can't ever discount people doing the absolute wrong thing at the wrong time. But I don't know. It does seem rather panicky. We haven't really busted anything yet, like the lows. We ripped up everybody yesterday, and I think maybe a lot of people just took advantage of the fact that most of the shorts were out of the market, and they could push the stocks back down. Maybe they want to buy it again. Maybe it is continuous. I'm just thinking that the market could hang on like a 6-year-old's loose tooth until the end of May. And that's kind of, in the past months, you get these kind of big violent moves. Everybody thinks it's over, and then you go back to the downside. Do well, maybe, at the end of May. Sell when you can, not when you have to. We will return.
Building wealth trading in the stock market seems impossible to most people.